Let's shift focus, talk about real estate as we kickstart 2016. One sector desperately awaiting the start of the year definitely has been the realty sector, in a year where realty has really taken a knock. The realty index, in fact, has fallen over 16%. One company that's definitely taken a hard landing is Sobha Developers, is down 35% on a year-to-date basis. And to discuss the year gone by as well as 2016, I'm being joined by Sharma, the Vice Chairman and Managing Director at Sobha. Mr. Sharma, thank you so much for speaking with us here on Bloomberg TV India. Wishing you a Happy New Year, sir. You're looking to build a new housing project in Gurgaon worth about 1,000 crores. Give us a timeline on that.
See, launch is expected any time, any moment now, this month, right? And we are readying it for that. This is going to be our most ambitious project in group housing, 40-acre development with 2,000 plus apartments in one of the finest location in NCR, abutting Delhi, where we hope that the people from the Dwarka and Delhi will be able to buy good apartments at reasonable prices.
Okay, let's talk about two projects that you've launched already, Sobha Clovelly and Retreat in Bengaluru during the first half of last year. What's the update on that?
Very good traction. You see, this year has been a mixed year for the real estate purpose. We had launched one of the largest ever project of Bangalore, close to 7,000 units, Sobha Dreammakers. And also we have launched the Sobha Clovelly, which also in Bangalore at a price point of close to 7,500 or so, whereas the first one was launched at a price point of about 5,000 rupees. And looking at the size, the earlier one we have done exceptionally well, more than 1 million square feet. In about 7 to 8 months we were able to sell. And here, as far as Clovelly is also concerned, we have been able to sell this product at 30% of the total units, whatever we have. Sobha Retreat, these are only 7 units, and almost half of them is gone.
There's some bit of concern as far as your contract revenues go. I notice it's down about 35% Y-on-Y. EBITDA has fallen 24% Y-on-Y. Where really is the strain coming in as far as your balance sheet goes?
See, we have already explained while analyzing our... This year we have not been able to book the income of some of the projects, like just now we mentioned Dreammakers, Sobha Clovelly and other projects, where since 25% of the construction cost was not incurred, our revenue recognition was low. At the same time, as far as the construction activities, contracting activities are concerned, right, this year we had already communicated in the beginning that it may not be as good as what we had achieved in the last year, which was a record year of about 800 crore top line. So we will have some reduction in our contracting income, and because of the income recognition practices we follow, we will have some loss of income in the revenue. But operationally we will be doing more square feet this year than the last year. And the second half normally should be better. As things stand today, the trend suggests so. So we are confident that the benefit of this will get reflected in our top line and bottom line from the next financial year onwards.
Let's talk about realizations, Mr. Sharma. The highest that you've seen so far has been in the NCR as well as Thrissur and Cochin. So do you see a greater push in those areas, essentially trying to monetize on those areas?
Yes, you are right. As we started this program where you asked for this 40-acre launch, so in NCR we are deepening our presence, where average realization definitely will come down, because currently what we are selling is all villas and row houses which come at a relatively higher price. With the launch of this apartment, the average realization will come down, but overall numbers will increase. Similarly, we have invested lots of money in acquiring the land rights in Cochin and in Pune, where we believe that going forward, our realization and volumes will be better in these two cities. Our idea has been that while we keep our dominant position in Bangalore, we also should deepen our presence in the other cities like NCR, Pune, Chennai and Cochin, and strategically we are moving towards that direction. Hopefully 2016 will reflect the benefit of this strategy.
What's your total debt to equity ratio? And before we come to that, I want to talk about how the Chennai floods has really impacted your revenues. You've sold quite a bit in Q2. Any launch delays or other impact due to the floods?
See, this started only in the beginning of this month, 2nd of December to be precise. Month is not yet over. So it will be too premature to define it as a trend. When something happens once in a century, there definitely will be an impact. But Chennai has its own ecosystem. Chennai leads both in software as well as in manufacturing activities. Once the after impact of this flood, it is taken care of, we believe that real estate market also will bounce back. And we have high hope and confidence as far as Chennai market is concerned going forward.
Okay, so then just give us a sense of how your total debt to equity ratio is looking like for FY16. Is there a target for FY16 end?
Last quarter has been a very good quarter from the cash flow point of view. Sobha remains one of the very few companies which is able to meet all its operational requirements through the generation of its operational income. As a company going forward, we do invest in certain opportunities, and because of that, sometimes that keeps going up or coming down. The current environment has been tough, and we believe that 2015 will be the last calendar year where the worst will be over by the end of this financial year. 2016 should usher the better sentiments, better volumes for the industry. So in that condition, in that situation, we believe that we should have invested money in those cities where we believe there is a good market. And that strategy of investing in these new cities, short term may lead to this kind of a debt going up. But in our view, from now onwards, this debt also will start coming down, and hopefully we will be back to where we were a couple of years back as far as debt equity is concerned. From a liquidity perspective, we have no issues. Most of our projects still remain underfunded. We have got lots of line of credit for the construction finance or otherwise against our receivable finance to draw from the banks. And going forward, we believe that this debt equity will have no adverse impact as far as our operations are concerned.
Okay, so the average cost of debt that you had as of the 30th of September in last calendar year was about 12%. Are you happy with where that is, or would you have any plans to bring that down?
It's a very good question. We are not happy with real estate industry, being asked to pay higher rate of interest vis-a-vis other industries. That's the general comment. As far as Sobha is concerned, our reduction in interest rates is faster than the banks transmitting the lowering of their interest rates to the customers. So Sobha stands to reduce its interest cost further. The target is to bring it down below 12% by the end of this quarter, which we have succeeded. And going forward, we should be able to bring down this debt by another 100 basis points, in my view, in next 1 year or so.
So before we let you go, give us a sense of what the land bank status is looking like and any monetization plans that you have for this year.
This is what we call it as an opportunistic event taking place. We do not mind monetizing our land bank. But prima facie we know the land banks what we have They have been acquired at a very low cost, at an FSI cost of about 100 rupees a square feet. And the construction industry or the real estate industry in India has a bright future. The way the government is putting focus on smart cities, the way the government is putting focus on housing for all, affordable homes, 6 crore homes in next 5 to 7 years time, and the way the Land Acquisition Act has been now in force for last 1.5 years, the most difficult situation for a developer will be to get the good quantity of land at the right price. And this is where Sobha tends to have an advantage over others. Of course, it will take its own time to monetize or develop these land banks. But being a real estate industry, we are not in a hurry, and our investors, we believe, will make lots of profits in times to come because of the land banks what we have in our balance sheet.
All right, Mr. Sharma, thanks so much for speaking with us. That's Sobha Developers kicking off 2016 with gains of about 1.5%. Last year, though, that's the one-year chart for you, hasn't been very good, 35% lower on Sobha Developers. Let's shift focus, talk about the banking space. ICICI Bank betting